What's up, guys? Welcome back to DCA. Today what we're going to do is talk about Polygon, the blueprint for $10. So if you're new to the channel, what we do here is a lot of long-term macro level data analysis. So we look at price data, we look at price history, a lot of on-chain data. So we're doing things like this in order to attempt to develop a long-term outlook and a long-term plan for investing in the cryptocurrency asset class. So this is the DCA Index Risk model. And the way that we use this model is to identify when a particular asset is overheated and likely in need of a pullback. So like I said, this has been optimized using a machine learning algorithm. So what that means is we have analyzed the cryptocurrency asset class over time to attempt to identify when and what characteristics a currency demonstrates when it is likely approaching a position where it will need a pullback. So when the DCA index is under 50, historically, these are appropriate times to be acquiring an asset. Okay. When it is over 50, I will start DCAing out of the market. In other words, dollar cost averaging out of the market. So selling a small percentage from 50 to 60, then an increasing percentage from 70 to 80, etc. And by time you get to the 90 to 100 range, you have reached the top of the risk metric, and the market is usually historically in need of a large correction. And we see this time and time again. So you could go through all of the different assets that we track on this channel with the risk metric. And you can see that often when they hit this 90 to 100 range, they go on a large pullback. So if we look at MATIC, so we were closing at around $2.44 at this time, and we retracted all the way down to 70 cents for a 71% loss almost immediately after hitting this highest risk band. Basically, the thing I want to show you today and why I'm doing an update, MATIC has come to about $2.20 today. So you can see that this $2.20 level has acted as resistance basically since the end of May. So May 26th, we hit this level. October, the end of October, we hit this level and were rejected. And now we've hit this level again. Now you'll also note that we have been on this uptrend since March. So we've hit this trend line now, 1, 2, 3, 4, 5, and now our sixth time. We've just been riding along it all through the second week of November and now have come off of it as of November 29th, where we've run into this level. So what we're looking for, and we don't do a lot of short-term analysis on this channel, so I'm not, mentioning this as some sort of swing trade or something like that. We are looking for MATIC to break above this level in order to create a new paradigm shift in the price level. Okay. So if MATIC is able to get above this $2.20 level and then hold it as support, then we can start looking into higher price ranges. Now, I'm not, if it goes above, I'm not going to be selling MATIC because I don't care about a 10, 20, 30% gain. We are here for the macro level gains of multiple hundreds of percent over time. And I know that's something a lot of people don't like to hear, but if you really want to profit in the cryptocurrency asset class, it's about holding over time and gaining long-term profits. You're missing out on so much if you're constantly trading 10 or 20 or 30% gains or losses. You're just missing out on so much that this asset class has to offer, okay? The way that we do our analysis here, we compare assets with relation to Bitcoin and with relation to Ethereum because they are the gold standard of the asset class. Therefore, all things in cryptocurrency are valued with relation to Bitcoin and Ethereum. And the reason is because Bitcoin is the market driver. You have to remember that. If Bitcoin is falling, let's take a look at what happened in May. All right. In May, Bitcoin fell below its 20-week moving average. And you saw MATIC fall just like every other altcoin. Let's look at Ethereum. Okay, so let's look at Ethereum in May, right? The second that Bitcoin falls below its 20-week moving average, it starts to plummet. And this is ubiquitous amongst the market. So you have to start thinking about things in terms of the altcoin that you want to look at with respect to its Bitcoin valuation and with respect to its Ethereum valuation. What we're doing here is saying that basically since the middle of May, MATIC has come down against Bitcoin to where we're sitting at today by about 32%. So if you bought MATIC on this day in May at the close, you would have been better holding Bitcoin by about 32%. Okay. Now, if you bought it at some point below this white line, you would have gained with respect to Bitcoin. So this is essentially a chart which shows you your opportunity cost. Okay. What I want to show is we have been, again, MATIC has been forming these resistance levels against Bitcoin. So we've hit this resistance level at 0.00035, which we're just going to call 35. So these numbers that I tell you from now on, I'm going to just tell you, 3.5, 3.8, rather than saying 0 5 times. So we have been hitting this resistance level at 3.5. So we came down, we broke below this level, we've tested it once, twice, third time, and now a fourth time. Now critically, and this is why I'm making this video today, we have broken above it. Now, the reason this is important is because when you break above a particular resistance level, and if you can hold it as support, that is how you can start forming a new paradigm shift in the market cap. So just think about this rationally. Bitcoin took off. Okay, Bitcoin took off here. This is when Bitcoin started to go parabolic. And as we've been saying on the channel time and time again, when Bitcoin goes parabolic, the altcoins will bleed against Bitcoin. So that means these are not gaining value at the same rate as Bitcoin. So you would have been better off holding Bitcoin at this time, which has been true at the start of every bull market. You are better off holding Bitcoin, and then, and only then, once Bitcoin goes on its parabolic run and starts to slow down or even pull back, then the altcoins can move. So we have gained orders of magnitude in price, and we followed this uptrend until we broke below in the first week of June. Then we have been consolidating against Bitcoin during that time. So that means basically there have been times when we're slightly up against Bitcoin, times when we're down, but we've more or less been bouncing between this 2.3 level and this 3.6 level, but we have critically broken above it. Now, if we're able to hold this level, that is how MATIC can start to go to higher valuations, $3, $4, etc. So this is the Ethereum to Bitcoin chart. And what I want to show you is, notice where the all-time high for Ethereum to Bitcoin is. It occurred in the middle of June of 2017. Now, if you recall, the middle of June was in fact not the all-time high price for Ethereum. So now we're looking at Ethereum USD over here. Notice where the middle of June is. So this is the all-time Ethereum to Bitcoin valuation, but this is where Ethereum was at this time with respect to the US dollar right here. Notice that we were at $400, okay? And when we did get up to $1,200 to $1,300, our Ethereum to Bitcoin valuation was actually lower. So that means if you bought Ethereum on this day and just held, you would have been better off actually holding Bitcoin, all right? Because if your Ethereum was valued here against Bitcoin and then it went up to $1,400, but your Ethereum to Bitcoin valuation was lower, that means Bitcoin gained more with respect to the US dollar against Ethereum. Okay, and overall, Ethereum has been doing quite well against Bitcoin. So you'll see this is basically we're on this longer term trend against Bitcoin where we are just trending up over time. Now we did hit a peak out here in June of 2017, like we said, but overall we have been trending up against Bitcoin. just like we're looking at with MATIC, which is here's the trend for MATIC. And you'll see again, over time, we're trending up against Bitcoin, which is what you want to see. It's the sign of health of the currency. But now, what about MATIC versus Ethereum? And we're seeing a similar picture. We're seeing a position where MATIC is trending up. Since the beginning of the year, we are trending up against Ethereum. We have been consolidating in this level. We have bounced from this support level up to this resistance level 1, 2, 3, 4, 5, 6 times now. And we're reaching to the resistance level that we've been hitting right here. Okay. So if you really want to see the value of MATIC rise, it's going to not only need to break out against Bitcoin, but it will need to break out against Ethereum also. And the reason for this is, if you just think about it, MATIC is going to be more volatile than Ethereum is. So if you're not going to be trending up over time against Ethereum, then why would you want to hold an asset that has significantly more downside risk? And the answer is you wouldn't. So if you don't expect that MATIC will continue to trend up over time against Ethereum, there's no reason to hold it. But I believe that we are, in fact, going to continue to trend up over time against Ethereum and against Bitcoin. Okay, guys, so what we're looking at here is the Bitcoin price. So estimates of possible Bitcoin prices during this market cycle and various levels of the MATIC to BTC valuation. So this is where we're currently at with MATIC to BTC. This is different prices where Bitcoin may end up. And then this shows you various MATIC to USD prices based on where Bitcoin is at and how strong MATIC is performing against Bitcoin. Okay. So you basically just cross multiply this by this in order to get these prices. And these are non-arbitrary numbers that we're picking. So at the current level, this puts us right at around $2. So this is a bit lower than the current level. Now, what if Bitcoin goes up to $100,000? Well, at the current level, that gives us a $3.80 MATIC. And if it went up to $150,000 and we stayed at the exact level that we're at against Bitcoin, meaning if you invested in MATIC or Bitcoin, your percent gain would be identical regardless of which you picked. You would be at a $5.70 MATIC. Now, I believe that if Bitcoin does in fact go parabolic up to 7,500, 150,000, towards those levels, the price of MATIC against Bitcoin will actually increase. So MATIC will move towards these higher levels. So this would be our all-time high MATIC to BTC level. And if we were at $100,000 Bitcoin, this would give us a $6.65 MATIC. And if it got to $150,000, we would be approaching $10. Now we could also get to $10 by going up to a level of 0.0001. Okay, so that's about 2.5 times above where we're at right now against Bitcoin, which is not out of the realm of possibility. All right, so if Bitcoin then were at $100,000 and we got to this higher level, we could get to a $10 MATIC. Now, if Bitcoin got to $150,000, then we could get up to $15 if we reach to this level. Beyond that, it's just purely speculation. I mean, even this is just a purely speculative number. We don't know for sure that that would put us up here somewhere, right where my cursor is. And remember, our all-time high is right at this level right here. Okay. So that would require us to go from where we're at now. And that might look something like this. If we were to do that, then we break above our all-time high. And then, so I guess, what these lines are is basically estimating that we will bounce within this support and resistance level where we're at right now up to our all-time high before breaking out up towards a 0.0001 MATIC to BTC. Okay, so if we were able to do that and Bitcoin were to get to $100,000, that's a $10 MATIC. Now, let's say Bitcoin only gets to $75,000, but we still are able to do that. That gives us a $7.50 MATIC. I suspect that this is less likely to happen because remember, as Bitcoin shows strength, the whole market will show strength. And typically altcoins will go on a parabolic run after Bitcoin has gone on a big run. If we only get up to somewhere between $50,000 to $75,000, I think we'll have a tough time getting up to this much higher level than we're sitting at right now against Bitcoin anyway. Now, if we start to reach into the $100,000 level, $150,000 level, this is possible, if not even higher. Now, I don't know if we'll be able to sustain these levels. It may only be in a parabolic blow off top type event. I think this valuation definitely comes into question if we can get up to $100,000 or $150,000. Now, again, this is all just speculative, but what it's doing is building a framework in order to assess the price of the currency that you're looking at and attempting to determine where it might be able to get to based on historical macro level trends in the cryptocurrency asset class. And this type of framework allows you to start to assess that, at least assess it from a rational, math-based point of view with data. Otherwise, you're just making up numbers and people are saying, oh, it's going to $20. Well, it's going to $20 based on what? Like where is your rationale coming from? So if you can't support your price prediction with evidence, with math-based data, then you're literally just making up a number. So that's what we do on this channel. We use data analysis, we use prior macro level trends in order to come up with frameworks for assessing various currencies and determine where they may be able to go. So I know this was a long one, guys, but I felt it was important, and I think that it's a good way of just looking at the entire market in general. So if you guys like this content, hit like and subscribe, hit the notification bell. You can head over to the Telegram channel to sign up for the DCA Index Risk model, and I'll send it out to you within a day. And until next time, as usual, see you.